Tesla awards Elon Musk $23.7 billion stock to stay focused. Latest EV news. In a stunning move that's set to reshape Tesla's leadership dynamics, the electric vehicle giant has just approved one of the largest executive compensation packages in corporate history, a jaw-dropping $23.7 billion stock award for CEO Elon Musk. But here's where it gets interesting. The unprecedented award comes with a crucial catch. Musk must remain dedicated to Tesla for at least 2 years, signaling the board's desperate bid to keep their visionary leader focused on the company during challenging times. This massive incentive package arrives as Tesla grapples with increasing competition and market pressures in the electric vehicle sector. The timing is particularly fascinating, as Musk has been operating without any formal compensation package since his previous $50 billion stock option grant was invalidated by court decision in 2024. This new award, consisting of 96 million new shares, represents what Tesla's board calls a first step in securing Musk's commitment to the company's future. But here's where controversy enters the picture. Is such an enormous compensation package justified, even for someone of Musk's caliber? While supporters argue that Musk's vision and leadership are irreplaceable assets worth every penny, critics might question whether any executive should receive such astronomical compensation when many companies are tightening their belts. What do you think? Is Tesla's board making a wise investment in their future, or is this an excessive use of shareholder value? Should executive compensation have reasonable limits, or does exceptional talent deserve exceptional rewards? Share your thoughts on this groundbreaking development in corporate. Elon Musk receives $29 billion in Tesla shares after court ruling. Imagine this: a single individual, already one of the wealthiest people on the planet, is handed a staggering $29 billion in shares from the company he leads. This isn't a plot from a Hollywood blockbuster. It's the real-life decision made by Tesla's board, sparking a whirlwind of controversy and debate. Let's dive into the details and unpack what this means for Tesla, its shareholders, and the man at the helm, Elon Musk. But here's where it gets controversial. Tesla's board has just greenlit a massive $29 billion, approximately 22 billion pounds, share award to its CEO, Elon Musk. This move comes hot on the heels of a U.S. court ruling that shot down a previous compensation package for the tech mogul. The court's decision left a 10-year pay deal, agreed upon in 2018, in legal limbo, awaiting an appeal. This new award is based on the recommendation of a special committee within the board, aiming to recognize Musk's contributions and secure his focus on Tesla. In a financial filing, Tesla's chair, Robin Denholm, and board member Kathleen Wilson-Thompson penned a shareholder letter to explain the board's decision. They described the award as a good-faith payment, acknowledging that a previous $56 billion pay deal was rescinded by a Delaware judge in 2024. To recognize what Elon has accomplished and the extraordinary value he delivered to Tesla and our shareholders, we believe we must take action to honor the bargain that was struck in 2018, the directors wrote. After all, a deal is a deal. Denholm and Wilson-Thompson addressed investor concerns about Musk's divided attention, noting that keeping his energies focused on Tesla was a top priority. From those communications, we know that one of your top concerns is keeping Elon's energies focused on Tesla, they wrote. This award is a critical first step toward achieving that goal, and this is the part most people miss. While Musk is the face of Tesla, he's also the mastermind behind SpaceX, the social media platform X, the artificial intelligence company xAI, and the brain implant business Neuralink. His forays into Republican politics have raised eyebrows and concerns among shareholders, potentially damaging the Tesla brand and sales. Dan Ives, an analyst at Wedbush Securities, sees the award as a way to boost Tesla shares by removing an overhang, a surplus of availability on the stock. Musk remains Tesla's big asset, Ives stated. The award, valued at about $29 billion based on Friday's closing share price, comes as Musk's net worth stands at $350 billion, according to the Bloomberg Billionaires Index. Over the past year, Musk's political entanglements, particularly his support for Donald Trump, have stirred controversy. This political involvement has reportedly turned off left-leaning Tesla buyers, both in the U.S. and abroad, and intensified competition in the electric car market. A survey by SP Global Mobility, shared with Reuters, revealed a significant drop in Tesla's customer loyalty since Musk's endorsement of Trump. In March, only 49.9% of Tesla-owning households in the market for a new car chose another Tesla, down from 73% in June 2024. Tom Libby, an SP analyst, described the decline as unprecedented, noting the rapid fall in such a short period. Musk, Tesla's largest shareholder, will see his stake increase from 13% to about 15% with the new shares. He has expressed a desire for greater control over the company to fend off potential ousting by activist shareholders. Tesla is pivoting towards robotaxis and humanoid robots, positioning itself more as an AI and robotics firm than a traditional carmaker. While we recognize Elon's business ventures, interests, and other potential demands on his time and attention are extensive and wide-ranging, we are confident that this award will incentivize Elon to remain at Tesla. The directors wrote, "The award is structured to gradually increase Musk's voting power, a move he and shareholders have consistently advocated for to keep him focused on Tesla's mission. If the 2018 package is reinstated following an appeal, the new package will be forfeited." Despite a nearly 20% drop in Tesla shares this year, the news of the award sent shares up more than 3% in early trading. So what do you think? Is this a brilliant move to secure Tesla's future, or a reckless gamble that could backfire? Share your thoughts in the comments below. Let's spark a conversation and explore the nuances of this high-stakes decision. Pre-market watch on Semiconductor, Wayfair, Spotify, Tesla. More big movers 2024. Are you curious about which stocks are making the biggest waves before the market opens? Let's dive into some pre-market action that's got investors buzzing. But here's where it gets controversial. The stocks we're about to discuss are not just any players. They're making headlines with their significant price movements. And this is the part most people miss. Understanding the factors behind these moves can be the key to making informed investment decisions. First up, we have ON Semiconductor, a semiconductor manufacturer that's been experiencing a surge in demand for its products. This could be attributed to the growing need for semiconductors in various industries, including automotive and consumer electronics. Investors are keeping a close eye on this stock as it reflects broader trends in technology and manufacturing. Next, we turn our attention to Wayfair, an online home furnishings retailer. Wayfair's pre-market performance is particularly noteworthy given the current state of the retail sector. With consumers shifting their spending habits towards e-commerce, Wayfair's stock could be a bellwether for the broader retail industry's recovery. Spotify, the popular music streaming service, is also making waves in the pre-market. The company's recent financial performance and strategic partnerships have caught the attention of investors. Spotify's ability to adapt to changing consumer preferences and its strong user base make it a compelling investment opportunity. Tesla, the electric vehicle and clean energy company, is another standout in the pre-market. Tesla stock has been highly volatile, reflecting the company's ambitious goals and the challenges it faces in scaling its operations. Investors are closely monitoring Tesla's progress in areas such as battery technology and autonomous driving. These are just a few examples of the stocks making significant pre-market moves. It's important to remember that pre-market activity can be influenced by a variety of factors, including overnight news, economic data, and investor sentiment. As you consider these stocks, it's crucial to conduct thorough research and consider your investment goals and risk tolerance. What do you think? Are you surprised by any of these pre-market moves? Do you have a different interpretation of what's driving these stocks? Share your thoughts in the comments below. Let's keep the conversation going and explore the exciting world of pre-market trading together.